All right, so you want to know about how to make your money work harder for you.
That's right. Passive income. That's
Mhm.
the name of the game.
We've got this really interesting Motley Fool article. Yeah.
Yeah.
It's all about durable dividend stocks, focusing on three companies in particular.
Okay.
Agree Realty, Stag Industrial, and Sun Communities.
Mm.
And get this, one of these companies hasn't cut its dividend in over 30 years.
Wow, that's impressive. So we're talking about those companies that can really handle those economic ups and downs.
Exactly.
Yeah.
So first up, let's talk about Agree Realty. The ticker symbol is ADC.
Okay.
Their 10-year dividend growth rate is a pretty decent 5.7% annually.
Not bad.
But you know what really caught my eye? It's their focus on something called net leases.
Net leases. Okay, I'm familiar with those. It's a smart way for a company like Agree Realty to reduce their risk and have a steady income.
Okay, so explain that to me.
Sure. So they basically own these freestanding properties, then they lease them out to like really strong retailers, but think of it as essential businesses. Like
Yeah.
grocery stores, drugstores, home improvement places, you know the ones.
Yeah, places that people are always going to need.
Right. So no matter what's happening with the economy, people still got to shop, right?
Yeah.
Now, the beauty of the net lease is that the tenant's the one covering most of those operating costs. Things like property taxes, sometimes even the maintenance.
So Agree Realty doesn't have to worry about that stuff.
Exactly. They basically just sit back, collect the rent. It's pretty low maintenance.
Okay, but can they keep growing like this?
Well, that's where things get interesting. They've got this smart acquisition strategy going on. Sale leaseback transactions, they're called.
Huh.
So what they do is they buy properties from retailers who need cash, right?
Ooh.
And then they lease it right back to them.
Okay.
So the retailer gets their money, and the realty, boom, adds another property to their portfolio.
So it's like a win-win situation.
Exactly. So they're not just sitting around, they're actively growing and bringing in more income. And remember, their financials are really solid. Low debt, a good credit rating, and they're not being reckless with their payouts. They have a conservative payout ratio.
Okay, so Realty sounds like a good option for people who want things to be nice and stable. But what about people who are looking for a little bit more, a little bit more growth, a little more excitement?
You're talking about growth investors.
Yeah.
Let's move on to Stag Industrial then. The ticker symbol is STAG.
Right.
Now get this. They've increased their dividend every single year since they went public back in 2011.
Every single year.
Every single year. And they're in a sector that is really taking off right now.
Okay, I'm interested. Tell me more.
All right, so they specialize in industrial real estate, primarily warehouses and light manufacturing facilities. You know the whole e-commerce boom.
Yeah, of course.
Well, Stag is right there in the middle of it. So basically, every time you click that Buy Now button online, there's a good chance your package is coming from a warehouse that's owned by Stag Industrial.
Wow, so they're benefiting from something that seems like it's only going to keep growing.
Exactly. But of course, there are a lot of companies in that space, a lot of people building warehouses.
Yeah, for sure.
Yeah.
So what makes Stag stand out?
Well, their strategy is super smart. They lock in their tenants with these long-term contracts, and these contracts have built-in rent increases.
Oh, nice.
Yeah. So for 2024, the average increase is about 2.8%.
Okay.
But here's the kicker. When those leases are up for renewal, Stag negotiates some pretty hefty rent bumps.
How hefty are we talking?
Try 30%.
That's weird.
It is. So they
Yeah.
can keep raising those dividends. And just like Agree Realty, they've got a really strong financial foundation, low debt, conservative payout ratio. They're not playing games.
No, they sound like they really know what they're doing. Okay, so Stag Industrial is definitely one to watch for those who are looking for growth potential. All right, I think I'm ready for the grand finale now. Tell me about Sun Communities. You mentioned before that they had a pretty impressive dividend history.
That's right. They haven't cut or suspended their dividend in 3 decades as a public company.
3 decades? I mean, that's incredible.
It's remarkable, right? A lot of companies can't even stay in business that long.
Let alone maintain that kind of consistency with their dividend.
Right. It really is impressive. So what's their secret? They've carved out a unique little niche in the real estate market.
Okay.
Think manufactured home communities, RV resorts, marinas, and even holiday parks over in the UK.
Okay, so it's a pretty diverse portfolio, but it sounds like there's a common thread running through it all.
Absolutely. And that thread is tapping into consistent demand, even when the economy isn't doing so great.
All right, so what's the key here?
Well, let's take manufactured home communities as an example. Have you ever tried to move a manufactured home?
I can imagine it's not easy.
It's a big undertaking, right? So people tend to stay put. And that creates a very stable and reliable income stream for some communities.
Right. It's almost like built-in customer loyalty.
Exactly.
What about their other properties, though? RV parks and marinas? Are those really that reliable?
Well, think about it. What have we been seeing in recent years? A huge demand for outdoor experiences.
Yeah, people want to get out there and explore.
Exactly. People want to enjoy life. And Sun Communities is in a perfect position to capitalize on that.
So they're not just tapping into consistent demand, they're tapping into growing demand.
Exactly.
Okay, but let's talk numbers for a second. Does their financial performance match up to their dividend history?
Oh, absolutely. They've had rising same-store net operating income, or NOI, for 20 years straight.
Wow.
So their existing properties are becoming more profitable, and get this, they're outpacing the average for the entire REIT sector.
That's amazing. It's like they've cracked the code to sustainable growth.
It really is impressive. They're not stopping there, though. Sun Communities has a whole growth strategy going on. They're buying up new properties, expanding their existing ones, and they're making sure they've got enough wiggle room, financially speaking, to jump on those opportunities as they come up.
So they're not messing around. Okay, so let's recap for a sec. We've got Agree Realty. They're kind of the solid choice for people looking at essential retail.
Mm-hmm.
Then there's Stag Industrial. They're all about growth and riding that e-commerce wave with their warehouses.
Yeah.
And then we have Sun Communities tapping into those changing lifestyle trends, all three of them delivering these durable dividends. But it's really interesting how different their approaches are.
It is, right. And, it really highlights how important it is to understand the why behind a company's dividend. It's not just about the payout, right? It's about understanding how their business works, how healthy their finances are, what their long-term plan is.
Okay, you got to look deeper, don't you?
Yeah.
See if they've got what it takes to handle the challenges that are coming down the road.
Exactly. Are they adapting to the way people are changing, how they're living, how they're spending their money?
Yeah. I mean, this deep dive has been eye-opening. We've gotten the highlights from that Motley Fool article, but I feel like there's so much more to explore.
Oh, absolutely. It's like we've scratched the surface, now it's your turn to dig deeper.
So what should our listeners focus on? What are the big questions they should be asking?
Well, first things first, what are your goals as an investor? And what's your risk tolerance? Are you looking for that slow, steady growth with minimal risk? Or are you okay with things being a little more, up and down if it means you might get higher returns?
Right, because these companies, they each kind of appeal to a different kind of investor, don't they?
They do. And don't just get fixated on that dividend yield. Take a look at the financials, the whole picture.
Okay, so how do you do that? What do you look for?
Things like their debt-to-equity ratio, how much of their earnings are they actually paying out in dividends? Are they reinvesting in the business?
Right, so you really got to understand the whole picture, not just focus on that one number.
Exactly. And think long-term. Think, is this company's business model sustainable? Do they have an edge over their competition? Are they flexible? Can they change with the times? Those are the companies you want to look for, the ones that can weather any storm and keep rewarding their investors year after year.
This has been great, but I got to know, you mentioned before that one of these companies hasn't cut its dividend in over 30 years.
Oh, yeah.
Which one is it?
I'm going to leave that one for you to discover.
Oh, come on.
Do your research. You'll find the answer. Investing, it's a journey,
Okay, I guess that's fair. You got to enjoy the process, right?
You do. And who knows what other interesting things you'll find along the way.
That's a good point. There's always more to learn.
Exactly.
It's amazing how much ground we've covered, huh?
It is, isn't it?
Starting with that Motley Fool article, we dug into Agree Realty, Stag Industrial, Sun Communities.
Yeah.
Talked about net leases, that whole e-commerce thing, and how it's changing everything.
Yeah.
And, of course, experiential living. Who knew?
Right.
But you really made me think about investing differently, too, looking beyond just the numbers.
Yeah, it's so easy to get caught up in the technical stuff. But, at the end of the day, it always comes back to people.
That's true.
The folks running these companies, the employees, the investors, and then everyone else, all of us, whose lives are affected by what these companies do.
And I think that's why I found this whole deep dive so interesting. It's not just numbers on a page, right?
No.
We're actually talking about real stories.
You got it.
Real people.
Exactly. And that's why I always say, keep learning. Don't stop with just these 3 companies. There are so many others out there. Take what you've learned today and dive deeper into these sectors, or maybe discover something completely new.
Yeah, branch out a little, right?
Exactly.
Yeah.
The more you know, the better choices you can make. You can really invest in the things that matter to you.
It's like you said earlier, it's a journey. It is. And this deep dive, it's like we've just opened the door a crack, and now we can see what's possible.
There you go. Now it's time to explore.
Exactly. So what are you waiting for, right?
Yep.
Go out there, see what you can find, and don't be afraid to ask questions.
That's the best way to learn.
This deep dive has been, I don't know, it's really got me fired up.
Good. That's what we want.
Not only have I learned about these specific companies and the market, but I've learned about myself as an investor too.
I love that.
And now I feel like I can really take charge of my money and, make a difference too.
That's what it's all about, making those informed decisions.
That's right. And that's really the heart of the deep dive, isn't it? We're here to spark your curiosity, get you excited, and empower you to become a better, more thoughtful investor.
You got it.
So keep learning, keep exploring, and invest in the things that matter to you. We'll be back soon with another deep dive. We'll be uncovering those hidden gems and helping you make your money work harder for you and for the world around you.
Happy investing, everybody.